The first query comes in from M. Murugappan, and he's on the line with us from Chennai. Mr. Murugappan, good afternoon, sir. How can we help you?
Good afternoon. I am holding Deepak Fertilizers and Petrochemicals around 700 shares at the rate of around 160.
Okay.
What is the short-term and long-term outlook for that share? Please?
Okay. Any reason you chose to invest in Deepak Fertilizers?
It is based on the recent results and their promoters holding on increasing side. That's why I...
And what would you say, what percentage of your portfolio would it be?
It is around maybe, or that is exactly, I don't know, maybe 10%.
Yeah, roughly 10%. Okay. Mayuresh, Deepak Fertilizers, it's roughly 1/10 of our caller's portfolio. He's making some losses, but not very significant, at least now. What would be the near-term and the long-term prospects? Should he remain invested?
So again, I think the numbers specifically in the December quarter have been a tad bit better because what you probably saw in the lockdown quarters, I think it did have an impact on the top line. When it comes to fertilizer companies, I think the working capital is something that is extremely critical because that is where I think the entire cash flow mismatch happens. But I think the things are expected to improve for the sector as a whole going forward. The expectations of EBIT margin coming back to higher single digit, whether the next few quarters numbers can justify that. And therefore the justification in terms of ROEs coming back to higher single digits around 17% in the next few quarters is to be observed. So clearly I think numbers will do the talking for stocks like Deepak Fertilizers. I think if the next quarter and couple of quarters numbers are better than what the street is estimating, you might earning strength coming back along with price strength as well. So the investor will have to have a lot of patience because the stock has been consolidating and might consolidate for a little bit more.
All right, Mayuresh, you've heard the technical view, you've heard Yu Young's view. What is your thoughts what are your thoughts as far as HUL is concerned over the long term, currently not performing as well as the other parts of the market?
Oh, absolutely. I mean, as Rahul mentioned, I think it's clearly been a laggard. And again, valuations definitely on the higher side. So I think the numbers more or less in line with expectations. And again, the commentary that was probably put out post Q3 numbers, I think what you're expected to see specifically from the high margin discretionary portfolio, the recovery is expected to be seen fourth quarter onwards. So you might see a couple of months pain or 1 or 2 quarters more of pain coming through in terms of volume-led price growth, and therefore the operating leverage might just remain stagnant onto the balance sheet. Home care, which is almost 29%, I think the margins did expand in the previous quarter to 19%. But again, I think the volumes is something which is going to be driving the overall operating leverage. Personal care, which is the biggest segment at 42%, the margins did expand there as well. But again, I think the entire premise, Mangalam, on all counts, whether it's personal care, food and refreshments, or whether you're talking about home care, is the volume-led growth and price growth. Input costs are definitely moving higher, which means that the margins might be stuck up in a band of sorts. Dividend yield is quite reasonable at 1.5 times. They're improving their supply chain. ROEs, ROCs have always been top-notch in excess of 20%, 25%. ROCs in excess of 27, 28%. However, I think because of the expectations in terms of all these business units taking a little bit longer to recover and valuations being a tad bit on the higher side, I think the consolidation phase might continue. Price strength is clearly what the stock might need to exhibit because it's trading very, very close to and below its near-term moving averages as well. So yeah, I think again, a consolidation phase for the stock, but clearly it's been a laggard Mangalam in this entire market.
So there's no respite for the market. The Nifty is still comfortably below the 15,000 mark. In fact, at one point was threatening to break the 14,900 mark as well. Led lower, of course, by the PSU banks and a whole host of mid-caps as well as banks itself. The Nifty Bank is now down almost 900 odd points. Good time to answer some more of your queries. Then we have Mr. Jitesh, who writes to us from Andhra Pradesh, holds about 50 shares of Pidilite at 1780. A short-term investor / trader wants to know whether to hold or sell. Mayuresh, just for the short term, do you think increasing oil prices could be a bit of a headwind. And what's your thought as far as the valuations of Pidilite are concerned?
So obviously, Mangalam, I think it will create an impact, right? Because if crude prices are expected to stay high, crude derivatives, specifically VAM prices, where the spot price almost a couple of weeks back was almost $1,300 odd, that might have any impact because that's almost 20% of the input costs and even more as far as Pidilite is concerned. However, I think the pass-through effect that can come through can help in mitigating the kind of margin loss that can probably happen. Therefore, I think the expectations of the management of keeping EBITDA margins between 20 to 23% in the next few quarters, with the expectations of growth returning back and volumes coming back very, very strongly, both in terms of the consumer and bazaar segment, as well as the industrial solutions as well. I think that should hold the stock in good stead. Rural markets, Mangalam, contribute almost 30-35% if I'm not mistaken, and they are trying to create alternative trade channels, e-commerce, modern trade, which is growing for most FMCG companies and Pidilite as well. So yeah, earnings should be quite reasonable in terms of 11 to 12% as a base case, which means that the kind of expectations that one has on the bottom line should be reasonable enough as well. Short term, again, I think looking at the market moves, the stock might gyrate quite significantly. So I think have a very tight stop loss. I think Rahul can probably help you, but I think the long-term story probably remains intact.
Right, Mayuresh, your quick take on Indiabulls Housing Finance?
The numbers have been better. So I think what they've posted in terms of asset quality specifically, I think has been definitely better in the last 2 quarters. Loan growth expected to bounce back very, very smartly and sharply as well. And the overall expectations in terms of both these factors holding true, along with their provisioning remaining at higher levels and expected to probably stay there for some time. I think that should provide some support to earnings. So I think it's more of a trading bet in my opinion, because I think I'll give it at least one more quarter for earnings resilience to probably be shown in the EPS strength and price strength as per our O'Neill methodology. So yes, trading moves very much possible from a fundamental re-rating perspective, 1 or 2 quarters more.